Hello from the Tukas Copy Studio in Geneva to the technical analysis today. I'm welcoming Jean-Francois Owczarczak from the Management Joint Trust and FinGraphs. Hello, Jean-Francois.
Hi, Daniel.
So last week we had quite a rebound of the stock markets after intervention of the Fed. And what is the situation looking like today in the technical analysis?
Okay, well, intervention is not really the word.
Okay.
It was really words from some Fed directors saying that in current circumstances, maybe we should reconsider stopping quantitative easing too early. But it did spark a market rally. And so let's start with the S&P today. So we're back on our fingraphs.com mosaic. And so you have a euro-dollar, cable, Australian dollar, gold, dollar Swiss, dollar yen, 3 months Treasury futures, and 3 months 30-year T-bond futures. So let's go into the S&P. So last week when we were here, this is an investor's view. So it has a weekly chart, long-term chart, a daily chart, which is a medium-term chart, and an hourly chart, which is a short-term chart. And we were saying that the daily was still hitting against its corrective targets. And it did go through last week, the corrective targets, igniting an impulsive move down. So this is quite an important news because it's the first time it happened on a FinGraphs system since 2011. And in 2011, when it broke through, it actually met its impulsive targets within the next few months. So it should take anybody out of complacency. And basically although the long-term trend is still up, we might be in for an important secondary correction. And so the targets down are leading us between the highs 1600s and 1765. Now, the market was in an exaggeration. If you see here, both envelopes touch each other. And also over the short term, if we go into the hourly chart, you did have a risk index well in oversold territory, as well as market stress, meaning both our envelopes touch each other. Hence the current rebound. At the moment, our trend indications are still in the bear. Quite aggressive targets. They're impulsive 2 targets, which means that they're therefore a very extended move. But at the moment, they're still heading down. So in this perspective, we would see more downside potential over the next few weeks. Now, it's worth looking at the more shorter-term chart. It's true that the snapback is pretty strong. So let's look at a trader's view. And basically, look at the 60-minute chart. So it's a combination of a 60-minute, 15 minutes, 4-minute chart. And if we look at the 60-minute chart, basically we're only in a correction up at the moment. And we need to move above 1895 to make it an impulsive move up. So that would be the first indication that on our investors' view, the longer term, we may be in a bit more for just a snapback. But at the moment, still a downtrend. Possibly the beginning of a secondary move down on the daily, and the weekly still heading up because it takes time to turn a weekly because long-term trends don't shift that often.
So if we look to the currencies, to the euro-dollar, how?
Okay, let's look at the euro-dollar. Well, the euro-dollar, interestingly enough, has been moving up since the US market has been moving down. And basically, a lot of the strength in the US dollars was based on the differential in growth between the Eurozone and the US markets. Now, if some doubts are cast over growth in the US, naturally the euro gains strength. And so what we were saying last week, and that we still state today, is that our weekly charts are still heading down on the euro, with targets that can lead us below 120, down to 111 over the next few quarters. On the daily, we've pretty much reached the targets, but there's more time into this move. So we cannot exclude that an impulsive 2 target at some point materializes. So we'd still be negative here, as with the bear, as with the negative targets, just we've reached a first level of support. And then on the hourly, correction up, we're saying that if it made it above 128, we'd be in an impulsive move. It made it quite quickly, but it did. And so at the moment, we now have an impulsive up move, which is projected. That means that given that the weekly and the daily are negative, we'll probably be neutral on the short term. Probably nice idea to go back to the trader's view and have a look at the 60 minutes again. And the 60 minutes basically tells us that we're in a correction down at the moment and that basically if we stay above 126.76, we're just in a correction down. But that level is quite important because it would mean a resumed downtrend if we were to break lower from it. So at the moment, back to the investor's view, negative over the long term, negative over the medium term, positive or neutral over the short term, and with a 126.70 mark here, which would be the break point for a resumed downtrend. Now, in the mosaic, gold is also one we have a look at. All the other dollar pairs are quite similar at the moment. We could see that there's probably more potential on cable, on the Australian dollar, a bit more potential on the Swiss and on the yen, but in general, the downtrends for the currencies against the dollar are still in place. Now gold, also quite an important snapback over the last few days, probably due to the effect that many people are seeing a triple bottom here. Now our weekly charts are still in a downtrend, as they have been over the last 2 years, and we still see some potential to the downside in terms of time and in terms of price targets. The daily charts still heading lower too. Now quite an important rally here, not casting this move into doubt yet, as we still see potential in price and time. The short term has moved impulsive. There is some potential, probably up to 12.65, which leads us to be neutral over the short term and waiting for downside confirmations again. That's it.
Thank you very much, Jean-Francois, for sharing your analysis and expertise with us.
Thank you for having me.
And thank you for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest analysis and exclusive interviews. Have a great day and see you next time.